Okay, we are live now. We are live now. I'm excited. Okay, so let's just give a couple seconds for people to join in before we get right into it.
All right.
I'm trying to go to the page. Okay, the stream is up. Okay, welcome everyone. Welcome everyone. Thank you for joining us this morning. How is everyone doing from wherever you are joining from? My name is Bola Johnson. I'm a content associate at Jobberman, Nigeria. Jobberman was founded in 2009, and our services have grown over the years with an attendance success rate, which has helped us remain number one in Nigeria. We are part of the African Talent Company together with our sister companies, Jobberman Ghana, Brighter Monday Kenya, and Brighter Monday Uganda. And together we are bridging the talent gap in Africa. We are passionate about businesses and professionals, which is why we have set out to continually match job seekers with their dream job and employers with ideal candidates. We are committed to creating opportunities such as this one for people to learn and be groomed and to eventually emerge as the best version of themselves. Today, we're going to be talking about financial planning. Now, you might be thinking financial planning, oh, is it not going to be too technical? No, we have you in mind, which is why we have designed this event to be easily understandable and digestible, even if, like me, you don't have a background in finance. So, this is the Simplified Financial Planning event for SMEs, entrepreneurs, and freelancers. Yes, we're going to be breaking down the complicated world of finance, and making it easy for you to go on this journey with us. So let's get ready to learn loads. We have an incredible lineup of speakers um, who are here right now. They are financial experts and seasoned in the financial industry with many years to their belt. So, if you are just starting out in business or you are looking to take this to the next level, this event is right in your wheelhouse. It is just for you. So, sit back, relax, get your notepads out, and get ready to learn lots. All right. So now I'm going to be introducing our guests. First, we have Henry Adebisi, a good friend of the house. Henry is a finance expert and leader with over 9 years of experience providing financial reporting, financial planning, analysis, business strategy, investment banking, corporate tax management, and financial controls across many sectors, including HR, financial services, and fintech. He is currently the head of finance at Jobberman Nigeria, providing leadership and support in operational and financial efficiency, helping the business achieve results. This includes core oversight of the business, governance, and financial controls, its related reporting and planning systems, fund account oversight, and business compliance. Thank you so much, Henry, for being here. We are really honored to have you. Thank you for making out the time.
Yeah. Thanks for having me, Bola. Yeah. Good
All
to be
right.
here.
We You're welcome. We also have Temilola Adeyemi. Temilola Adeyemi is an award-winning financial expert who has tutored more than 10,000 African women on financial literacy and helped over 500 individuals, including busy professionals and business owners, to create personalized financial plans. She has a bachelor of Science degree and a master's degree in finance from Bowen University and a PhD in finance from Kwara State University. Her work as a PhD student has been published in several reputable journals, cementing her reputation as a talented and accomplished scholar. Temilola is an associate member of the Chartered Institute of Bankers of Nigeria and an associate chartered member of the stockbrokers. In 2022, Temilola joined MoneyAfrica, a Nigerian financial literacy company that utilizes technology to teach financial literacy through courses, consultations, webinars, and other methods. Temilola is also an author. She wrote the book Investing Manual for African Women, which is widely popular across many countries in Africa. Thank you, Temilola, for joining us today. We are so glad that you are here, and we know that it is going to be an impactful session because, well, you do this a lot. Yeah, you are used to training people on financial matters, so we're ready to learn at your feet. Um,
Thank you for having me, Bola.
you're very welcome. Okay. Um, So let's get straight into it. I want us to talk about, firstly, so looking at the financial landscape, especially if you don't have a finance background. Um, may say you have a small business or you're a freelancer working for yourself. There are several obstacles that might present themselves when you begin to handle your financials. And there's a tendency to make mistakes. So I want us to talk about the common mistakes that small business owners make regarding accounting, bookkeeping, and how they can be avoided. Henry, I want you to please take this question.
Yeah, thanks for that, Bola. Yeah, I think so. Usually with SMEs, especially with the whole surge in Nigeria and Africa at large, you you find people getting into this business excited with what opportunities it provides, right? But they shy away from the accounting side of it, which is
Mm,
keeping proper record. So so usually they won't pay so much attention into record keeping. So for instance, even when you try to consult for them and you're trying to help put the records together, you find out they're not properly kept. So you actually have to use some other approach, side like incomplete record approach to prepare their finance. Um, so record keeping is like the biggest. So I mean, they're so busy trying to run the business, so they just don't pay attention to record keeping, right? So the other part is so it's they get easily carried away and they merge business transaction with personal finance, right? So even though they separate the bank accounts, so you still have them running a lot of personal transaction through these accounts, right? And this can easily cause a lot of complication for you, right? Tax, and all of that. So you can easily get taxed higher on different tax layers because of this, right? And also, it's also hard to do a proper classification of your accounts. Say, what type of expenses this, and then you're like, no, this is my personal expense. I use this for this, and it gets confusing. So I guess the third one for me is also even when they are intentional about keeping that record, they're not able to classify their accounts properly to say, what type of expenses there is, because classification of accounts helps you to track and see how you're performing better, right? How do you classify expenses? These are office expenses, these are, even your revenue lines to be able to track how you're performing across. But so I mean, those are the top three I see most of these SMEs, yeah, facing.
Oh, thank you very much. Um, that's good to know. I guess bookkeeping, record keeping is something that a lot of people miss and something that we should really, really pay attention to. Thank you very much for that. Tim Lola, also, I want us to talk about the personal side of it. So when we get our paycheck, usually we are looking at the bills we have to pay, and the places where our money is going, and that is our immediate focus. But in making financial plans for ourselves, that's in our personal finances, what are some of the mistakes that you have also noticed that people really make?
Thank you, Bola, for that question. I think number one issue of financial pitfall when it comes to either for an individual or even looking at it from the business perspective is that quite a number of people do not have what we call budgeting plan. You see, budgeting plan is more like your roadmap. So it tells you these are the things I'm to spend money on. These are the ways, these are the things, these are the income I'm actually expecting. So it sort of help you to prioritize your expenses, prioritize your goals, prioritize your needs. But we discovered that people use fire brigade approach. So when they want to pay for their child school fees, they just, oh, I'm going to use my salary from March. I'm going to use my salary from April. Or when they want to buy a car, they will say, oh, I can't wait. I can't save for 1 year. I would rather go ahead and take loan. So when you do all these things, you sort of have a long-term implication on your financial independence and your financial freedom. Because you are sort of putting yourself in a tight space, in a tight corner. So instead of you being able to, you wait, take for example, you take loan, you take loan and you are not able to pay back because some things happen at the end of the day, then probably your bank is not coming after you. You have to pay. It will not only affect your ability to pay back or your confidence, it could affect your mental health. So you discover that you are not productive as much as you should be at work, and it's having a long-term implication on your performance. So your employer is not looking at you like, oh, this person is not performing well. So all these things, they are interwoven. As it's affecting you as a personal, as in you being as an individual person, it's also affecting you as a business owner, because as a business owner, you should be able to sit down and look into your record. Okay, what amount are we expecting from these sales in January? What amount are we expecting in February? All the months are not the same, right? Because there are some months that you will get more sales than the other. But if you already have your budget in place, it sort of help you to know when you should take it back, and when you should channel where you should channel more efforts. So budgeting is important for both individual and for businesses. I'm going to mention another point, which is emergency funds. A lot of people don't have emergency funds. So, like I said, because we like to use fire brigade approach for things. When for instance, now during COVID-19, quite a number of people lost their job. Those who didn't lose their job, their business didn't perform well. Now, I don't know maybe if you still receive that message, but till last year, I was still receiving messages from loan companies that would say, your friend so person, even though people that I don't know, your friend so person is owing us, and if you don't come and bail the person out or help us find the person, we are going to, did you get something?
Yes,
Yeah.
they were
It was
popular
that
then.
terrible. It was that
Yes.
terrible. So I discovered that there is a way we can go around this thing, is by ensuring that you have an emergency fund. Emergency fund is simply saying that if you spend 200,000 naira comfortably in taking care of yourself a month, you should have at least 3 to 6 months of that living expenses saved up somewhere, so that either you lose your job, or you have huge medical bills, or you have any unplanned situation, you are able to take care of it, so that you don't have to go and sell your long-term investment. So let's say you've already bought Zenith Bank shares, you have bought MTN shares, but right now you are now having an issue that need urgent attention. So some people go ahead and go and sell all these their long-term investment. They come back and say, oh, I saved in the stock market and I sold at loss. They sold at loss because they didn't allow the market to take its momentum. They didn't allow it to take its effect of being a long-term strategy. So those two things, budgeting, emergency fund, they are very important for either business owners or individuals.
Okay, thank you so much, Tibi. While you were explaining, you've even entered some of the other subject matters that we had, but that's great. Henry, I'm going to come back to you. So you mentioned not keeping records, that's adequate records, and not classifying accounts. So for somebody like me who is not really vast in financial things. I want to know, okay, if I'm going to keep so and so records, what are the columns that I need to have in my sheet or in my book? What do I actually need to input every week or every month so that I am keeping adequate records?
Okay, yeah. So there is two ways about it. So there is the fact that we have a lot of accounting softwares out there, right? And some of them are even very, very basic, right? And they you can watch a lot of YouTube videos where they show you how to actually work on these accounting softwares, right? And I mean, there's the other part of using, say, Excel, right? But then it gets technical because you then need to now begin to do modeling and all of that. So it's basic enough to use accounting softwares, right? So usually these accounting softwares comes with models that are customized, right? They already give examples of expenses that your business should have, like rent. They already customized in that sense, right? Of course, maybe the revenue, because of the nature of your business, it might not capture your revenue lines properly. So let's say you do training or you do some consulting and all sorts. Maybe you sell goods, right? And you want to be able to see each of the product lines that you run, then you create those product lines. So in bookkeeping sense, those are called chart of accounts, right? And it's not that technical, honestly. So for instance, you get on the accounting software, you sign up, some of them are free, right? And then you see chart of accounts. It's as easy as saying, oh, I want to add another chart of accounts. Then it asks you, okay, do you want to create an income line or it's an expense line? And then you just follow through, right? And of course, most of the times, most this business owners, freelancers, you have friends in finance, accounting, right? They can just, you wouldn't take them like 30 minutes to just customize it for you as well. So those are the things to note there. The software comes that way, right? Um, of course, in then recording your accounts, you need to make sure you're doing bank reconciliation. So also you get really lost, running businesses and not able to really understand the flow of transactions in your bank, right? How do you mirror that bank with the records you're keeping? So you need to check, right? If there are inflows in your bank account, does it tally with all the records you've recorded for income, right? All your expenses in the bank account, have you captured that correctly in your expense lines, just so that you know that you're keeping a complete record and accurate record of your business, right? So again, this software is already come with a lot of customized models, and then it also helps you to easily generate reports, right? So you can easily generate an income statement. So that's a statement that shows all your income summarized and expenses summarized, and you're able to see whether you have profits or not, right? So so it comes with all of this, right? It also helps you track your receivable, payables. Who are those that are owing you? Most of the time, these business owners will start, you keep the records in a paper and you roll some columns and you're listing Mr. This owe you and all of that. That can easily be done in the software, right? And these softwares are very efficient that even when you want to, when those guys start owing you, you can actually key in their records on the software and you send them an invoice from the software, and then it gets to their email, right? And the software tells you this person is already owing you for 20 days. It's getting late, it keeps you keep you up and ensuring that you're able to collect, right? Because the worst thing you want to avoid is now being cash trapped, right? And you're not able to have enough liquidity to run your business. So yeah, these are the things I would just point out for now.
Okay, thank you so much, Henry. So do you have any software recommendations? Like you mentioned that
Yeah.
all the columns are there when we open the software. Do you have anyone that is quite easy to use and maybe free for those that don't want to pay for the
Yeah,
software just.
yes. So there is Wave Apps.
Okay.
Wave Apps is free. For the longest time I've used it. That's the one I see like very suitable for very small businesses, and helps you capture your needs, and it's free. So most you get that. There's a couple of other, but that's a very, very, very good software there, right? So the other one, you're already making some money, and you want to show a finer account, then you can use QuickBooks.
Okay.
QuickBooks has been, doing wonders. So with QuickBooks, for instance, you're able to, if you're into inventory business where you retail or you wholesale, then it's best to use QuickBooks. It's not really that costly, honestly. So because the cost of actually running these things, it's outweigh the benefits a lot. So QuickBooks can help you with all of that, the accounting, the inventory itself, and all sorts. So the other one is Zero. All these softwares are online softwares, right?
Okay. Okay.
You can just connect to it from your phone, for instance. Most of them also have apps where you download the app on your phone and you're able to invoice someone from your phone, right? Yeah.
Okay, thank you so much, Henry. Temilola, we're coming back to you now. So, we've heard about some of the mistakes that we make when we are trying to do our financial planning, or the things that we don't even do. So, you mentioned budgeting as one of the key things. I want to talk about budgeting and investment. So, what are the things that need to be in your budget, and how do you adequately plan to be able to make investments, like for now and then for your future also?
Okay, thank you for that. Okay, when it comes to budgeting, I there are different budgeting methods that you can actually adopt in your, on your journey to being financially free. You can use the envelope budgeting, whereby you set money aside. So you know that this is the amount you want to spend on your food in a particular month. Let's say it's 40,000 naira. You create an envelope for it and you put money there. And you know that once you exhaust the 40,000 naira, is either you start taking Gary or you look for another means. So that's the envelope side of budgeting. But there is this general one and a very lovely one that I talk about that I think most people use. That is the 50, 30, 20% budgeting rule. So that actually for the 50%, it simply means that you should um, actually use that 50% of your earnings. So when you receive your salary in a month, you should use 50% of your earnings for your needs.
Hmm.
So everything that surrounds your feeding, your house rent is your need, because if your landlord should send you out of the house, you'll be living under the bridge. So your house rent, your feeding, your clothing, they can fall under the 50%. Now, because it's a need, is also called a necessity. So if buying one clothes in a month is a need for you, buying one clothes in a month could be a need for you. Buying five could actually not be a need but a want. Do you get what I'm saying? So
Yes.
sometimes when people are saying, the 50% cannot cover my needs, because they are actually doing more. They are doing more than expected. So the needs are the things that are important to you. They are the things that you cannot do without. You are going to eat. You are going to eat in a month. You are going to go to work, and you will need money for transport. You are going to buy fuel. You are going to get data. These are necessity. They are important. Then we have wants. So we don't want it to be like you are too frugal, that you don't even have any room for enjoyment. We want you to flex, right? So that's where the 30% comes in. So that one is for probably you want to go to cinema, you want to register for gym, you want to, even the Ashrebi service covered under that one. But also that also can also feature when we talk about black tax. That is one culprit that is actually affecting an average Nigerian from being able to achieve their financial goal. Because the moment you receive salary in a month, you are hearing, yeah, I'm not too long, you're receiving call on your phone, and your sister from wherever. They have not actually even checked on you in the past many weeks, but because they know that 25th is when you receive salary, or first of the month is when you receive salary, then you see their call. They are like, oh, please, can I, auntie, alpha now, brother, alpha now. So that one, I've actually had client that is suffering from that. So they'll be like to me, I'm earning, but it's like all my money is going into helping my siblings. Then I tell them, see, let that money actually fall under your wants, so that you are actually sacrificing your ashrebi, your cinema and all that for that purpose, just for the meantime. And another way you can actually even address that is help them, direct them to skills that can even start fetching money for them as well. Don't be anybody's bank account. Don't be anybody's ATM. I think I just need to chip that in. That is not part of the question that you asked me, but it's a way in which you can actually solve your black tax problem. So, and there is the 20%. I used to tell people, don't say that I'm going to start saving or investing when I get to age 40 and age 50, or when I start earning in millions of naira. There are two things to this. Number one is the fact that that which you are thinking may never come, because you have not actually, you have not actually prepare yourself for what we call financial discipline. So if you don't absorb financial discipline now that you are earning quite low, when you start earning big, you will still be having problems. I've had clients, sessions with clients that are earning in millions, and I will ask them, okay, you've been earning this amount of money for the past many years now. So how much have you been able to save? And they say to me, it's true, I don't really have savings. How possible?
Wow.
That's because they're actually not serious about financial discipline when they were earning small. And now that they are earning much, they still don't know how to go about it. So this 20%, I tell people, you see, when you collect your salary in a month, you collect 200,000, you collect 500,000, that money is not for you. That money is for all those things that are calling your attention. The 20% you will set aside now is for you, is for your future. A time is going to come that you will not be active enough. You're not going to be, a time is going to come, whether you like it or not. You guys are not going to be with Jobberman. I'm not going to be with Money Africa. So at that level, how will I be able to take care of my needs? So we see people that they depend on their parents, depend on their children, and see this work generation that we are right now. If you are planning to depend on your kids retirement, you are in for trouble, because they are going to remember their own family before they remember you. So now that 20% is for your savings and is for your investments. And also, when you start actually saving and investing, there is something beautiful about investing, and that is the power of compound interest. Your interest continue to earn interest. As a matter of fact, do you know that if you should start saving 50,000 naira from age 25 till age 60, you will have 200 million naira at the end of the day, based on the present interest rate. This same amount of money, if left without being invested or saved, is going to return just meager amounts. And that is why it is important that when we are actually, as we are pursuing other things, trying to ensure that you meet your needs and all that, don't leave your future to the unknown. Don't leave your future to your employer. Don't say, oh, my employer. And that's another thing that people say. They'll say, yes, we have pension plan. And I will say, okay, how much is in your pension account? And they'll go about, I think it's about 20 million. I said, 20 million naira. When you actually subject it to inflation, inflation as at end of March, when this Nigerian Bureau of Statistics released their inflation results, we are already in 22%. And long-term inflation in Nigeria is now even more than 10%. So it's to tell you that 20 million naira by age 60 or in the next 30 years might not even buy a tin of milk. Okay, it might not be that terrible. But it might not even buy you, just a wheel in your car. And that is why it is important that as the employer is doing their own thing, they are helping you to secure your future. You also need to have a plan for yourself. And you cannot depend on the government. Even that one, you are riding on a serious bicycle. Because right now, okay, maybe we are actually about, going into, yeah, that's it actually. We are going into another political administration. We don't know how long that is going to last, either 4 years or 8 years. There are still situations where where a particular government administration start a plan and they don't actually complete it because somebody else come in and they change the plan. So you cannot say, okay, a time is going to come when I don't want to mention it, but when a particular person gets into government and they are going to create this plan for me, nobody does that again. So the budgeting is really, really important. You are able to plan for the important things. You are able to take care of yourself, enjoy the life, enjoy this life as you are also planning for the future. And you are not leaving the future to take care of itself. You are allowing everything to take shape as time evolves.
Wow, thank you so much, Timmy. I'm still going to stay with you because
All right.
now we've decided that we want to save this percentage and we want to invest as well. Where like what what avenues are the safest for us to look towards when we are trying to invest? I know that we have government bonds, mutual funds, but which avenues would you advise for somebody that is just starting, that doesn't have any history of investing? Which avenues will you recommend to that person?
For somebody that is just starting,
Yes.
like I mentioned at the introduction of this call, go and settle your emergency fund. Don't say you cannot have emergency. Emergency fund is really, really important. I know as much as I've actually advised that, oh, start saving and investing. Emergency fund, we is like the water that you need to calm you down. So that when you have emergency fund already taken care of, then you can now start thinking of investing. So let's say the person I want to advise now has settled their emergency fund. So now let's talk about investing. Now you can start investing with, and gone are the days that you need millions of naira to start. Today you can start investing with as low as 5,000 naira. In fact, some platforms will allow you to do even 2,000. Now you need to understand that your portfolio, your investment strategy should cut across both low risk assets, mid risk assets, and high risk assets. Now, for the low risk assets, they are usually normal saving accounts, high yield saving accounts. Now, for this one, you are not actually subjecting yourself to too much risk. There is a rule in finance that high return comes with high risk comes with high return, and low return comes with low risk, right? So this particular investment, your portfolio, let's say you are the amount you want to commit to saving or investing, let's say 50,000 naira per month. Now you can decide that 30% of that amount will go into low risk assets. Why am I saying that? So that if for any reason you need to liquidate your fund, either to buy a gadget or to do some other bills that are not part of your budget or that your emergency fund cannot cover, you can easily liquidate that money. Aside that, it also gives you some sort of calmness. So when the stock market is doing its own, that 30% can be giving you peace of mind that don't worry, life will soon get better. So that 30% is really important. Now we have the mid-risk assets that also give you a sort of mid-return. So for the mid-risk asset, I can be talking about the likes of mutual funds, treasury bills. Now, when you talk about treasury bill is simply short-term debt instrument issued by CBN on behalf of federal government to meet short-term debt obligation. So for that one, you are not exposing yourself to too much risk, and at the same time, you are not expecting too much return from it. They're not expecting too much return from it. So you can, I know gone are the days when you will need 50 million naira to enter into that space. With different, platforms now, in fact, with 10,000 naira, you can still get into that kind of space. So you don't have an excuse. You don't have an excuse. So when it comes to your mid return or your mid risk assets, I also advise that is good. Treasury bills, mutual funds, dollar mutual funds, they are good for you. That's when we can now start talking about long-term investing. And others, when I'm talking about others, I've been talking about them being fixed. They will give you fixed return. So at the beginning of the year, you can have an insight, like, okay, I'm going to get 5% after 1 year, 10% after 1 year, or based on their previous performance, you can be able to say, I'm going to get this amount by the, between this, within this range by the end of 1 year. But when it comes to stock investing, it's not really, really, you cannot really, really predict. Yes, you can use previous experience. Okay, maybe based on historical performance, they have been able to do well in the past 5 years, but it is not sufficient because the performance of stock market is actually subject to the what's it called now? The performance of the stock you're investing is subject to the performance of the company you're actually investing in. So, for example, you are investing in MTN. I know we have been hearing the news about MTN in recent time. And now there's this news about MTN, that MTN is releasing another maybe service platform that, in fact, there is not going to be any problem with downloading or uploading whatever on the internet. The speed is going to be very fast. And they have that beautiful thing, because the stock market reacts to news. Go and check what is going to happen to the stock price of MTN within that period. It's going to move up. But let's say there is another news about MTN, that MTN, I don't know what is happening. Maybe their management is doing bad or something. Terrible news, actually. Let me call it terrible. So once that news hits investors, they are afraid. They want to start selling their stocks. And when that happens, stock price begin to fall. Now, it is not just micro indicators that can actually affect the performance of the stock market. We also have macro indicators, like when the federal government or the CBN increase interest rates. When they increase interest rates, people tend to remove their money from the stock market to the fixed income assets. So those are the things that actually affect the performance of the stock market. So if you have high spirit about MTN before, and now MTN is having a major issue that is affecting their share price, and you plan to sell after 1 year of buying that stock, then you should know that you are in for a loss. So that is why it is important that you first categorize your portfolio in a way that it covers different risk level. So you have the one that is pursuing low risk assets, mid risk assets, and high risk assets. And of course, high risk assets also comes with what? High return. The one thing you must also know is that no one saves to becoming wealthy. No, you cannot save to become wealthy. You can only invest to become wealthy. And the only place where you can actually get that kind of vibe is with the stock market, because the stock market pays you more than the inflation rate. Inflation is the culprit that is eating into people's money. And whatever any fixed income asset is giving you, they cannot give you a rate that will beat inflation. So the highest they will give you 10%, 15%. And I just told you that inflation last month was 22%. But when you invest in the stock market, it's subject to the performance of that company. In a year, you can have a company that will return 50%. You can have a company that will return 100%. Do you know that as of last year, September, Tesla returned 1,200% in the last 5 years? Now, which fixed income asset is going to give you that? So that is why it is important that you distribute your portfolio in a way that it cover every level: low risk, mid risk, and high risk.
Okay, thank you so much, Timmy. That was wonderful. I'm really learning a lot. So, Henry, we're coming back to you. We're still talking about expanding your reach. As a business owner, money is coming in, money is going out. I'm seeing my profit margins. At what point would you advise that I should start thinking of expanding my business? So let's say I'm offering a service here in Lagos, but I've seen a need in Ibadan for this service that I'm offering. At what point would you say, okay, it's okay, I should expand so that I don't do it too early and run into trouble?
Yeah. So with business and expansion is actually it's a big phase, right? It's usually something that business owners don't really think about so much, right? And it's important that you ask that question, because so you have this store, you have this business, and you're just really thinking, how do you make so much from that same business in that location? And of course, there is the social media age where you're able to reach as many people as possible in different location, right? And you can scale expansion using the social media, right? So and with that, right, with your existing strategy and maybe some, help from you guys, the marketing gurus, you're able to scale in that sense, right? So there is that, right? So there is now the physical expansion. Say, you're trying to scale into having multiple locations and all of that. So key things to note is, first of all, you need to have identified that you have a market presence, right? So with whatever you're doing, it's well accepted. You have growing number of paying customers, right? you can see that liquidity flowing in, right? So the other one is profitability, right? You can't be trying to scale a loss-making business, so you need to scale the existing one to profit. So and of course, tracking your finance and keeping record is what's going to tell you that you're making profits. And that's, piggyback to the initial conversation we had, right? So if you don't track your business expenses, business performance, you won't be able to tell the story. Even when you're trying to raise funds or whatever, or, if you come to, because, one of the, finest ways for me when I think of SMEs raising funds is, raise funds to your friends, guys that are also making money and all of that, helping you scale your business, you agree to some contract terms and all of that. But the financially literate ones amongst them will say, can I see your books, right? How are you faring? So it's important to track that profitability scale. And it's when you see that you're already at a good scale at the moment. And expansion is not something to really rush into. So the question is, why do you want to do that, right? Because you need to now be very clear on what's like the strategic plan that is driving it. What's the long-term thinking around that expansion? Can it be achieved within your current reach? So you need to do a lot of that assessment, and then of course profitability. Um, then capacity comes in, right? So because I mean, if you're trying to expand, then you need to have the capacity to scale, right? If for instance your business is driven by you, and you're the face, you're the driving force for profitability or business growth or customer acquisition, then how do you scale that model? And that's why it's important that when you're thinking about your business, you're thinking about it independent of yourself. So that way, the way you structure how the business actually performs doesn't rely on you. And that's the way you're able to hedge capacity. So, does that mean you just, have maybe business manager over there, and all of that, right? Resources also around funding, right? Have you been able to scale your current business such that you have enough liquidity to push that expansion, right? So, so really, expansion has to come from a very long term thinking. You need to have modeled it out. You need to have like carefully planned it. It's not so most of the time, business owner thinks they're making a lot of money, but you're not actually making a lot of money until you actually see the financial health through financial reporting and all of that. So it's important that that's already considered, at the time you are conceiving expansion. So you will know that you have enough resources to scale, right? Of course, you can hire a team of experts to help you in all those other locations and all of that, right? Now, when you're trying to expand, question is where to where, right? You need to have established that there is existing demand in that new market or new location, as it were, right? Do you already see the pattern? So if you segment your customers, your existing customer, do you see that behavior in that new market or in that new location? And you can say, look, if I actually expand to this location, then I'm able to, maybe make twice what I already make here and all of that. So you need to identify that market, there is existing demand there, and their opportunities and all of that, right? Of course, the competitiveness of the market, you need to assess that as well. So do you want to scale into somewhere that a lot of people already do what you do? So you need to factor all of that in. But and ultimately, like I mentioned earlier, strategic planning, you need to lay it out, right? If you're not as, and again, financial, when you get into the nitty-gritty of trying to really grow your business, right, it's important that you get expert advice at each stage, right? And that's where, I mean, we can, speak to financial literacy and, try to drill it and all of that, but you need to be very intentional about driving it, right? Even personal finance, you need to be very intentional. So if you say, you know what, I want to retire with so fund, at the end, you need to be intentional about it. You need to learn along. You need to, it's not just gonna come like a random fix. So strategic planning is key. So that way you lay it out clearly. You're very sure what are the resources you need? That's where you state everything. It's also even clear, does it mean you will burn out cash in first 6 months, right? What's the cash runway that you need to hit profitability in that new expansion? So strategic planning comes to place there, and then you're able to be very clear on how you actually scale. Yeah.
Okay, thank you so much, Henry. Now we know that expansion is really a long-term thing, and we need to
Yeah.
draw it out and make sure we are even profitable in this business, this first business, before even thinking of adding another one. So, Temilola, I'm going to come back to you now. One problem that a lot of us have is tax compliance. So, and it's not really common knowledge. We don't know, okay, I'm arranging my books for the month or for the year. What percentage is supposed to go to taxes? Am I even supposed to pay at this time? So that it doesn't come to a point where we are now defaulting on our taxes. What are the basic things that we need to know regarding tax compliance? So, Timla, you are muted.
I was muted. Sorry
Okay,
about that.
okay,
So, okay, actually, I was saying recently I was opportune to take some business owners on bookkeeping and all that. And one
okay,
issue that we discovered that a lot of business owners are having is with this tax thing that you just mentioned. Number one, let me first say that most business owners don't even want to pay tax, right? Especially the small business owners, because they're like, they always come up with things like, what am I benefiting from paying tax and everything? They're not giving us good road, they're not giving us the basic necessities for business owners and all that. Let me first talk about the importance of tax to businesses. So, if you're a business owner, sorry, please, if you're a business owner with sustainability in mind, expansion in mind, you are forward thinking, paying tax is important for you because at some point you want to expand. I tell people that there are cheap ways to getting money. When you start doing things yourself, you start doing your business, you start putting yourself out there. That okay, guys, this is what I'm doing, and everything. You've been able to do something about it. But the time is going to come that you build your business to a level where you are attracting investors. You are attracting people are seeing it as, oh, you are not just doing these things for random. You are not being like an unserious person. You are determined. And they want like either they want to give you that cheap money that you don't need to go to the bank, you don't go to bank to borrow from them. They want to give you grants. And one of the things they are going to ask from you is tax. Tax is one of them. And when you now come up and say, because Nigerian government is not serious, I'm not paying tax, they'll be like, you are dealing with a serious person. Because tax is one way of you being showing how responsible you are. So I want to advise business owners, don't say because you're not getting that. You are limiting your opportunity when you don't pay tax. Because I've seen situations whereby opportunities is there, people are selected based on the fact that either they are paying tax or they are not paying tax. That is there. I've also seen situations where somebody wants to relocate out of Nigeria, and the person, has all these visa that is meant for business owners, and they now ask the person, "Do you have tax clearance certificate and everything?" And he was not able to provide it, and because of that, they lost that opportunity. Don't wait. Don't wait till you become a sample unto others, a specimen unto others. When we now start citing example of, oh, this is how this person does opportunity because of this and that. So it is very important. Now, talking about tax, do you know that it is not all the tax that you are expected to pay? Like the company income tax, if you are not earning up to 25 million naira in revenue, you don't need to pay company income tax. So why are you afraid of, why are you afraid of doing the necessary things? And now I have people that, yes, they actually registered their business name, they did all that, but that was just the last thing they did. When you go ahead now to the CSC platform, you will see that their account is inactive because they are not filing the necessary tax that they, yes, you don't need to pay tax on your revenue, right? And because you're not able to pay revenue. But it's compulsory that you do tax filing every month. And these are the things that people don't do. So there is, aside the company income tax, that if you are not of any of 25 million naira as revenue that you're exempted from, you know that there are other taxes like VAT that you need to pay, value added tax. And the value added tax is not really something that is coming from your pocket. Value added tax is a sales tax that is expected that is being levied on either your product or your service. You are not expected to pay for it. It's your customer that is paying for it. So why the headache? All that you need to do is that, okay, is it that you include that tax? It's 7.5 right now in Nigeria. This might change tomorrow. Either you include the tax in the product or in the service that you are offering, or you actually make it an exclusive tax. So for a service company, maybe your service is actually 50,000 naira. You can work that tax into it so that you don't need to do a lot of salaye for Nigeria, because Nigeria, once they hear that there is tax on the payment, I've seen a situation, and this is not even me trying to make the whole thing funny, but I've seen a situation whereby we issued an invoice and we sent to the person and we indicated on the invoice that this is the tax you're paying. But I said, please let everything be in this amount that I'm paying. I don't want to pay a separate amount, right? So we have people like that. Look for a way in which you can work that tax into your money, I'm sorry, into their payment without it affecting your profit. And there is exclusive tax where you actually charge 7.5% on the amount of money that they are what they are expected to pay you for your product or your service. Now, when you do all these things, when if I'm an investor and I ask for your financial report and I'm seeing all these things, being recorded in your account, it makes me take you as a serious person. I will know that I'm not just committing my money to somebody who, hmm, when Henry was talking about chart of account the other time, some things started playing in my mind. You will be checking business owners account and you'll be seeing shawarma in their account. Hey, what I do? I don't understand. Is shawarma part of what? You'll be seeing money for, I don't know, you'll be seeing funny things. Okay, maybe we should ask Henry, where do we classify shawarma in chart of account? Right? So these are the things that investors actually look into. When I ask for your chart of account and I'm seeing things like this, it makes me see you as unserious. I don't want to commit my money to you. Then we come tomorrow and say, there was a time in the office that all of us were tired, there was no sales, and as a way of making ourselves feel lively again and enjoy ourselves, we use our money to we order for chicken and chips from Chicken Republic. Okay, that's a good one, right? I'm not saying it's bad. Actually, at some point, you want to enjoy yourself at the office. But what I'm just trying to make you understand is that these are the things that people look out for. So the company income tax is there. You may or may be exempted. You may or may not be exempted, depending on your revenue. There is the VAT, value added tax, which is levied on the sales. There is the withholding tax, which is also levied on some certain things, like maybe your stocks, you are actually investing in the stock market, there are some taxes that you need to pay. There is a payee, right? So if you have employees that are working under you and you have been able to, you have been able to build a business to the level of, being able to pay them good salary, there is a payee that they need to be paying, that they need to be remitting as well. And aside that, there is the PIT, which is the tax that you yourself you are paying. Of course, you need to have knowledge of all these things. We don't expect that you'll be able to do all these things by yourself. But having a knowledge of it will make it easy for you when you are preparing the necessary accounts, either for the month or for the year. I hope I was able to touch your question.
Oh yes, yes, you did beautifully. Thank you so much for that. So if you have any questions for our speakers, please just leave them in the comments. And when we are wrapping up, we'll take those questions. We'll take as many as we can. Uh, so thank you so much, guys. Henry, we're coming back to you. So a lot of say freelancers now, let me use freelancers. It's quite difficult for them to separate personal money and business money. So even small business owners, many times they might find it difficult to separate both accounts and both incomes, and then you find out that they end up spending the money that's supposed to go back into the business. What do you advise for people facing this challenge? How do you advise them to go about separating personal income and personal money and business money?
Yeah. Thanks for that, Bola. So I think I mean, the first step is that you have a separate account. Super important, right? And when you're starting the business, you have to be really intentional about separating it. It's at that point it's more around your financial discipline and how serious you are about the business, right? So again, don't forget you have an accounting software where you are recording this transaction. You have your separate bank account as well, right? So you understand that everything that goes into that your bank account will feature in the accounting software. That's the rule. So either it is personal or not personal, it will go through the accounting software. And for instance, when you're being audited or you're trying to raise funds and there's a need to check your transactions, then people begin to see that a lot of personal transactions are running through the account. Even if you've tried to classify them properly, you still be seen as not so serious, right? Because that should be very much separated, right? One of the things that you can also then do to now edge against that is that when you're structuring your chart of accounts, you have an account that you call, say, director account, right? Or CEO account. So that account helps you to so you're able to use that account to run your personal transactions. So when you have those personal transactions, you put them through that account. So usually it's a balance sheet account. So of course, balance sheet is that account that helps you see the net worth of your business. So it can either be, say, a liability to the company or an asset to the company. So if, for instance, you take money and then you spend it on something, right, it means that you're owing the company. So the company would see that as an asset that we're still going to collect from you. So that way, so when you structure it that way and someone sees your finance, they see that you've been able to separate those transactions that are relating to your own personal use and all of that. But I mean, I would advise to minimize it. But if you have to, then you separate it that way. You have a GL called general ledger or chart of account called director's account. Again, it means that all the transactions that happens from your personal activities would not go through your income statement. So it's not part of the expense of the business. It will only go through that special account. And the expectation also is that you try to clean it up, right? So clean it up means that so let's say at the end of the month you see that from that director account the balance is the 500K. Then you pay it back to the business, or the business pays it back to you, depending on whether you're the one owing the business or the business is owing you. So yeah, pretty much covers it.
Okay, great, great. And you sort of answered the first question that we had because, but maybe you can still. I want to ask the director's account is if you were paying yourself as an employee of the business, would your payment also come from that account?
No, no, no. So it's also not um, a come from per se. It is just an account that you use to determine the position of your liability or debt to the business, right? Now, if you're an employee of the business, then you should get salary, right? So which means in that case, your cost will go to the personnel cost of your business, right? Most of the time, business owners don't pay attention to that, but you need to, pay yourself, right? So you have a contract. If you have, some board that you've set up for your business, they sign that contract to show that yes, you are the CEO as well as the co-founder, or whatever it is, and then you draw up that contract. It spells out the terms, so it's not like today you take 500K, tomorrow you take 200K, and you say it's salary you're taking. Before you know it, you milk out your cash flow, right? So it's important that you have that contract spelling it out. So these are your benefits. Maybe you get a monthly allowance of 20K, and then salary itself is also amount. It means that that compensation goes through your business payroll along with other stuff that you have, right? And then it's part of the business expense. It doesn't go through your current account in that case.
Okay, thank you so much, Henry. So, Temilola, I want you to answer one of the questions that a participant dropped. It says, with the current economic situation in Nigeria, how can SMEs grow without loans? And if the loan structure is the only way out, how then can loans be made easy with low interest rates to encourage SMEs?
Actually, funding is one of the primary issues that is affecting businesses in Nigeria. So if you're an employee and you say you want loan, in fact, if you should put call through to 5 banks, there is tendency that you will get response from the banks. Now, if you are a business owner and you say, "Oh, I need loan," maybe you have to go and be doing, you have to raise video for you to be able to access funds. That's because it's actually difficult to get loan as a business owner in India. And this is why it is important that number one thing you need to do is that you must have a viable product or service. Nobody wants to give you money and when you say, there's no sales or that, you need to calm down. Yes, I understand what is happening in Nigeria, and people are saying, how can fintech banks be charging this high and all that? They are not in support of them charging high, charging high interest. But the truth is that a lot of people are now riding on that horse now. Like, oh, you guys, it's because you charge me too much, that's why I'm not able to pay back. Why approach them in the first place when you know you will not be able to pay back? So the loan environment is not friendly for business owners. For an employee, they might be giving you, let's say, 3.5% per month. But when it comes to you as a business owner, they'll be charging you 10% or thereabouts. And that is why it is important that one way in which you can, other ways in which you can actually source the funds. Number one way could actually be through family and friends. Now I understand that when you're borrowing money from family and friends, it could actually it's a bit cheaper than approaching banks. But at the same time, we are going to see a situation whereby family will come after you and say, if not for us in your life, where you are today, you will not reach. So they will then come and so today somebody come around and say, I want to sew dress, and you're charging them 15,000, 15,000. You are the one that brought you to this level now. What I say, I will pay 5,000 naira. So that is why when it comes to that stage, borrowing from family now becomes a thing of question, right? So, sorry, getting money from family now becomes a thing of question. But there are other ways, and that is also where grant comes in. But you cannot access all this opportunity without keeping a proper financial record. I'm sure everyone will be able to testify to that part because since he's into more of numbers. You are not keeping a proper financial record. You have to let them know this is the amount that is coming in as revenue, this is the amount that's coming expensive, this is the amount that is coming back to us as profit, and we will be able to say, okay, this is what we are likely to get as ROI if we should commit money to you. So that is where keeping financial record is really, really important. You cannot continue to keep your record in your book. Just like you said the other time, John is owing us 100,000. We're going to pay back. No, somebody wants to see all these things. You want to see your financial statement. You want to see your income statement. You want to see your cash flow. You want to see your balance sheet. And if you are serious about your business, you cannot afford to say, I was on a call recently. I'm sorry, I love story. I'm a storyteller. So I was on a call recently. I discovered that there was this program and it's a sales it's sort of sales boot camp, and they were inviting business owners to come and take it and all that, and it cost about 150,000 naira, and you need to see the people who were jumping for it. Hey, I will go and borrow. I was partic. I was doing okay. The same people, they are now telling them, okay, come and learn how you should structure your finance, your business record, your transaction, and you are going to pay just 10,000 naira, and they're like, hey, it's much. So we cannot just get the free. So Nigerians, when it comes to sales, they are always off spirit. But when it comes to recording of their business transaction, they will take it back. Then they will be looking for an alternative. You can build you can build a million worth of business without a good proper record. You can still go back to where you start again. And that is why it is important that Keeping financial record is not just something that you just do it when you like. If you know you don't have the skill, please give it out to the right people that should help you. Bring in an accountant, bring in a bookkeeper, let them help you so that when you want to actually access money for your business, it becomes easy. Now there are different grants out there. There is the Tony Alumelu's on there. There are different grants really. But when you go and look at all these people, you need to have proper financial record. You need to have a viable product because I will tell you, it's going to get to some point that banks actually will not be the best place for you to get money. Now, let me tell you that you can build your business to a level where banks will be the one to be begging you to come and collect you because they know that you are doing something sensible. When you have not gotten to that level, they are not likely to be friends with you that will not be giving you money. Aside that, taking money from banks without you subjecting it to the impact it will have on your profit, it will have on your business is risky. So let's say that you invested 500,000 naira in your business, and your business, after all the deduction of expenses, paying all the necessary bills, you're just going to get, let's say, 30% as return. Now, bank is saying that you should pay 15% as loan. Does that make sense? That is why it is important that you ensure that you build your business beyond loan. If you are in a paid employment, save towards starting your business. Don't pull out of your you just went for a seminar and they're talking about this lovely business idea, like, oh, I'm going to just go for it. This is a good boy. In fact, you have gotten a web designer, you have designed your website, you have gotten a social media manager. Hey, it is risky. Ensure that you save towards starting your business. Don't take loan to start a business. Don't take loan to start a business. It's a business that you have never ventured into. You don't know what is going to happen. So during COVID-19, somebody actually took loan from bank and she imported face mask from China. And the person got to Nigeria and they're like, in fact, she said people were telling her that her friends said, don't worry, we're going to buy it from you. But by the time we got to Nigeria, that was when the whole thing was already dying down. I'm telling you, they sold it for loss. Don't start a business with loan. So let your business get to the level where you know that taking loan will not hurt you. But while you are still, going through that stages of life, look for other means. Get money from your family, get money from your own personal savings, do bootstrapping, as let's say bootstrapping, crowdfunding. Let people gather money for you to start. But as much as possible, if you are starting a business, don't start with loan. But if you are expounding, you can take a loan, but also subject it to the impact it will have on your profit and your and how it's going to affect your business.
Okay, thank you so much, Temilola.
Yeah,
So
sorry, Bola. Just to add to what Temilola said, I think one of the other aspects to look at, for instance, is equity. So most of the time, people think about business, and you just want to be the owner of your business, right? But it doesn't harm to actually partner with people, right? It doesn't harm to say, yes, you have 80% equity and somebody has 20% equity. The person is liquid enough and the person will probably like the business idea. So present it to the person and get some fund. Equity. So you guys, equity it means you're both joint owners, right? So it means the person is also a shareholder in the business. It means you're taking the risk together. So if it becomes zero, you both lost. I mean, it's viable as well. You both win, right? So, and that's one of the best way to actually edge against that risk. In that sense. Sorry, Nigeria just happened to me. But yes, equity is really key, right? And you can get as many as possible. So, as you're starting, you can just, partner with someone, right? Most of the time, people want the business to actually grow like very large before you now begin to source for fund. That way, you have a good valuation, right? Say, because for instance, how do you even value your 20%, right? But if you start with someone together and you're growing from the scratch, then you guys can, just bring the funds together and bear the risk together, if that works. Yeah.
okay, thank you, Harry. So we are saying that actually applying for loans to start out a business is not very viable. It's better for you to, look for partnerships, look for grants, collect money from family members before exploring the loan route. That's great. Thanks, guys. So I want to take another question from the audience. This one says, Temilola, maybe you can answer this. Is it wise to save in Naira? Because you remember you talked about inflation and the inflation rate being at 22%. Is it actually advisable to save in Naira right now? Timilola? Oh, I think.
Sorry, I lost you a bit.
Okay. So the question is it advisable to save in Naira right now?
Okay, so that's a beautiful question to ask. You know, if you had asked me this question maybe some months back, I would say, as much as possible, have your saving in dollar and all that. But things have changed, and when things change, we should actually know how to approach questions like this. Number one, let me first say that there is nothing saying you should not have your investment in naira. You can have your investment both in naira and in dollar. Now, let me now break it further. I was talking about emergency fund the other time. Now, emergency fund is something is a kind of money that you want handy, that anytime you need it, you're able to liquidate the fund, you know, like that. So that kind of money can actually remain in naira. Anything that you want to, any goal you want to achieve under 1 year, you can save in naira for. But when you're talking, so now disadvantage of having such money in dollar. Let me take it now. The disadvantage of having such money in dollar is, let's say you actually convert that money to dollar when it was on $800 per one or something, and now Nigeria, we don't know, maybe Angel just smile on us in Nigeria, and it now fell back to, let's say, 600, and it's an emergency fund. Then emergency situation then happen. That means you have to sell the money you have put in dollar. You have put in dollar with that 800 back to loss. Do you understand? So if it is for short-term coverage, I would still advise that you do a lot of dollar investing. I will advise that you still do more of your investing or your saving. Now, when it comes to long-term perspective, when we are looking at it from a long-term perspective, the advantage of saving in dollar, number one, is for the fact that we have what we call currency devaluation. So Nigerian currency is not strong due to inflation, right? Due to inflation and other things. So the way we trade, the way every country or every economy of the world trade in dollar is not the way we trade in naira. I don't even know if there are any countries that are trading in naira, but there are countries that trade in dollar. So that sort of gives dollars, it's not make dollar a strong currency to have your money, right? So for the long term view, having your money in dollar can be a good thing, because eventually the exchange rate volatility then come in place. Like as at the beginning of last year, we were trading dollar for in the black market for 480 naira as of January. And by the end of the year, there were people that were selling their money for 850. You can imagine. So let's say you are getting interest rates of 6% on your dollar savings, and you're also getting that exchange rate difference. That's a lot. But it's only advisable if you will not need the money in the next few months. If you need the money in the next few months, things will not go the way you plan. Now, the reason why I won't say that you should also have so much of your money in dollars is because things are happening. For example, last month, there was this news all around about the BRICS, you know, the BRICS nation. They want to actually reduce the dominance of dollar in the world. And they are actually on this plan already. If this plan will work or it will not work, nobody can boldly say right now, right? So you can imagine that at some point in a few years to come, dollar is no longer the dominate currency in the world. What happens to all your investments in dollars? So let's say by luck, China actually come, in side by side in dollar. What happens to the money that you have converted at high rate? Let's say you converted it at $800, and now dollar is now being converted at $500 or 500 naira per one. What benefit do you get from that? So as much as possible, if you are saving or investing for the long term, you can do a bit of dollar investing. But if you are saving or investing for the short term, please do naira. And again, because naira is not a strong currency, it tends to offer you more rates than dollar. So, for example, now you can get a saving platform that pays you up to 50% on your investment. But you can never get such thing with dollar, except you are investing in space, investing in the stock market that is moving very fast than the average market. So they both have their own advantage and disadvantage.
Wow, thank you so much, Temilola. Henry, do you also want to weigh in on this question?
Yeah, I mean, saving in USD, you're actually speculating. It's just as if you're plugging into Bitcoin. If you get what I mean, you're speculating at the end of the day. So and it can either go up or down, right? So and that's, like Temilola said, you need to structure it properly. So you need to have a bit in USD and some in Naira. And it also needs to be informed by maybe what's your long-term thinking, right? Do you want to be the one that has some, assets in UK or in US or something like that, and then you want to, build towards that, so that even if Naira gets better, because you have a thinking around investing in those countries, you're able to actually use the fund, right? But again, a lot of things are playing out in the market at the moment, with the big countries trying to, move against USD domination and all of that. So you need to be like really careful with that commitment, right? So again, it has to be driven by what you're trying to achieve, right? From a point of preservation, right? Um, you need to split it properly. So if you're trying to like preserve your funds, right now it's not a really a good time to say you want to put so much into USD, because you don't know how it will play out. I've seen a lot of, and you have to also be watchful of what's playing out, the policies out there and all of that, right? I've heard some news around, the new incoming governor's intention around exchange rates. So it could come in and it makes some drastic decisions around what the rate looks like, what does parallel looks like, what does all of these things looks like. So at the end of the day, because you're here in Nigeria, the currency you're so sure of is Naira. And if you're trying to actually scale here in Nigeria, you need to have more in Naira. So if you're trying to do so much out there, maybe you even have businesses that require you to import and all of that, and you want to keep so much in USD as also. It really has to be driven by what you are trying to achieve. And at this time, really not speculate.
Yes, yes. Thank you so much, Henry. The time has actually flown by. We wanted to use just 1 hour, and we're getting to an hour and 30 minutes already. Let's take one more question from the audience. This one is actually this one is kind of a funny question. It says, "How do I become a millionaire in 6 months as a freelancer?" I don't know. So, do you want to take this question?
Yes, actually, it's possible. Is that how does it want to become a millionaire in 6 months, right? Is that the question?
Yes,
Yes.
yes. A millionaire in
Okay.
6 months.
And it's a freelancer.
I'm also interested in the question because I would like to know as well.
Like I said, really, there is nothing impossible. You know, let me also, like I said, I love stories. Let me share somebody who grew right in front of me. So all my life, I've actually been a finance person. So from the fact that I'm not one of those people that studied medicine in school and they now find themselves in theater house. No, I don't want to. I've loved money from childhood, so I understand this thing. Now, what I'm saying is that, so I used to feel, okay, I have financing, like, oh, I have financing control, but I discovered that when you know something and you keep quiet about it, you are more like you don't know it. But when you don't know something, you research it and you bring it forth. You allow people, oh, this and that. People will consider that you know that thing more than somebody who knows it but has kept quiet. Now, where am I going with this story? Right in front of me, 2020 during COVID-19, somebody grew from followers of, let's say, about 1,000 to right now, she's controlling about 150,000 followers on Instagram. Now, that's not just it. She looked for a gap, right? She looked for a gap and tried to fill it. She knew that there are people who need this financial literacy thing. I'm not going to mention anything, but you know, there are people who need this financial literacy thing. And she started talking about it. Oh, I'm going to teach you how to do this. I'm going to teach you how to do that. And over time, because it's a gap, it's a need. I'm telling you today, she's doing so great. Now, to the person who wants to actually make 1 million naira within 6 months, you know it is possible. Look for a gap. Look for something that people are dying for. So let's say that people don't know how to create. Maybe you are a web designer and you are so good at it. How much? How much web design do you need to do to actually achieve 1 million naira? So let's say that I don't know how much they charge, but let's say for one web design, you need, if people can pay you 100,000, then you can be able to get 1 million naira, get 1 million naira with 10 people. So now that you know that, go and look for, maybe gather your projects, gather all the things that you have done in the past, right? Put them together either in a folder or on a platform where you can just put all these things and let people see. So you can send me the link and I will go there and just go and check. Oh, so you have done this, you have done this. That's good. Having gotten your portfolio ready, now go to where your target audience are. Are they on Instagram? Are they on LinkedIn? Are they on Facebook? Go and pitch yourself. Go and position yourself as an expert. Oh, and I know a lot of time we don't like to employ people to actually do their thing. So you believe that you can do accounting. It's not just to put one or two together. I can do it myself. That is what is killing a lot of business owners. So you actually use money to get more money. Now look for a copywriter to help you write a good pitch, a good sales copy, and I'll put it out there. Oh, I do this and do this and do this. I'll be able to I'll help you to be able to achieve that. This same thing also work for, let's say you're a Facebook ad expert. Let people see that you can take that stress off them and you can be able to help them generate this certain revenue if they should employ you. Do you know that the moment they are able to see your track record, they're able to get your audience, they're able to see your track record that indeed that you have done this work, people with, offers will flow into you like water. So that money that you are thinking to take you forever to be able to achieve, you might even just be 3 months for you to do it. Aside that, what about using influencers? If you know that the people that you are targeting, they are actually sitting on an influencer page, how about talking to the influencer and say, okay, maybe basically you charge me 15,000, 20,000 naira, give the money to them and say, please help me talk about my business. Give them discount. I'm going to actually give you discount, give discount to the first 5 people, to the first 10 people. These are approach that we use in our company and is working. So I'm not even telling you things that are not working. They are real. Use them. And if it's actually required that you run adverts, you run ads, run ads, ensure that you just get these things done. So if your target is 10 people for you to achieve 1 million naira, with this strategy I just talked about, getting your portfolio ready, joining platforms where your target audience are located, working with influencers, working with using ads where necessary. I'm telling you, you will even get beyond that one. But the challenge is when you get that 1 million naira, how do you ensure that we don't start all over again? Because that's where the problem is. So when people get 1 million naira, that is the time they now remember. Then we have something we call, I'm not going into finance now. Then we have something we call lifestyle inflation. That's when they want to start getting more beautiful dresses, shoes. That's when they want to start going to, I don't know, different places, right? So when you get that 1 million naira, ensure that you look for a way to plug some percentage back into your business so that you don't become a millionaire today and a pauper tomorrow. So that's what I'm going to advise.
Thank you so much. I mean, it happens in all facets. It could even be a salary earner that just gets a new job and then the whole lifestyle just changes. Um,
Exactly.
so we're about wrapping up now. This has been an awesome session. Thank you so much, guys. So maybe finally, if you guys can just give the final nuggets for operating a successful business, just what you want people to really take home. Henry, if you just take us through that quickly.
Okay. Yes. I mean, final notes. Key things to really sit on as a business person is that you need to have clear financial goals. Very clear, right? This is the revenue I want to make this year. You don't set up a business and you're just running it, right? So, what is your revenue expectation? Those are financial goals, right? What is your profit expectation? You know, what is your growth expectation if your business is already existing for a while? So, how much revenue do you want to grow this year? How much profit do you want to grow this year, and all of that, right? Other thing to note is budgeting and planning is super important, right? So in setting those goals, you're also budgeting, right? But in budgeting, you're then going into details. You're going into, these are the services I want to provide this year, and this is what I want to make from each of these type of services that I provide. And if you're into trade, these are the product I sell, these are the numbers I want to make from this product. These are my expenses, right? So it means that if my landlord is troubling me with rent or whatever, I can't just go pick another location and then you have a rental cost that has doubled, right? So you need to, so because you have it as a budget, that's why you're very intentional about how much you're spending, right? How much are you spending on office costs, entertainment, and all of that? So budgeting becomes very key for you as you scale your business. You need to set it out and review them, right? It's not enough to just set your budgets and plans. You need to set them out, review them. Reviewing them then means that you're able to record the actual transaction. So you said, yes, this first quarter I want to make this. The question is, what did you make? Right? So you need to put that down and then be able to compare, do variance analysis. What did I say I was going to make? What did I make? What are the things that cost me to not make them? Right? Was my price too high? Do I need to drop it a little? And I'm able to scale a larger volume, right? If I'm not making the profit I should make, right? Do I need to cut down on expenses? But if you don't do those reality check and just reviewing your actual operation, you easily lose out, right? Now, in business, you say profit, but profit is good, but cash is king, right? You need to put a lot of emphasis on liquidity, cash management, right? You might not be profitable, but if you're liquid, you can stay in business for as long as possible. You've had businesses that, they've not been profitable for maybe like 4 years, right? A lot of business currently that you think they're big out there, they're not as profitable, right? But because they're liquid, they're able to continue to scale and sustain, right? And then you're able to grow towards profitability eventually. The other key thing I want to mention is risk management, right? So at every layer of your business decisions, you need to assess risk. Risk management and your risk framework is usually driven by your risk appetite as a person, and it's also a function of the business you are into, right? If you can't take so much risk, you're probably in another business that is not so risky, right? So that's already there. But then when you're trying to think about expansion, thinking about whether you want to take a loan or whether you want to get a partner, or you want to develop new products, or you want to, whatever you're trying to do, just play out the scenarios, right? Which one is the best? Which one is the best outcome? Which one is the mid expectation? Because most of the time people go into business and get so excited that you don't assess risk and then you just lose out, right? So it's very important to assess your risk, play different scenarios of outcomes, right? And then have risk mitigation, controls in place that, okay, what if this happens? This is what I'm going to do. If this happens, this is what I'm going to do, right? I guess I'll close it there. But again, also in business is strategic investments, right? The fact that you're in a business doesn't mean that you cannot still make strategic investments, right? That investment might be into partnerships, might be partners that can help you scale. Temilola was talking about you getting a content writer or something, right? that person might just be a strategic partner that you're not actually spending money to get it done, but because the person is also getting some benefit from you, you're able to do that, right? The other time, I was having conversations around marketing, right? If I know that you have an audience that speaks, that are going to buy my service, and I also have an audience that buy your service, why don't we exchange your audience, right? So those are the kind of strategic partnership investment that you can also look at as you scale your business. So that would be it from my end, Bola. Thanks.
Thank you so much, Harry. Really appreciate you. Temilola, final thoughts, quick final thoughts.
Okay, so I will speak to the area of personal finance because, like, one issue I've discovered that most business owners have is that they'll be like, Temi, so are you saying I will just put this money here and you'll be giving me 10%, 50%? Well, I know that if I should invest this money in my business, I'm going to actually get more return. And so because of that, most business owners don't even have other investment plans aside their business. Now that is very risky because even I don't know whether you are following this story of Beg Beyond and Bat or what's the name of that company that recently they are actually selling off their business. So even the biggest of any business that you can think about, anything can happen to them. They can file for bankruptcy at some stages of life. If that happened to your business, how do you ensure that you don't end up affecting your health, your mental health? There's a situation of people that they didn't have stroke for any reason or the other, but because their business failed at some point, they developed stroke and everything just went down. So your business, just like Henry mentioned during the call, you should separate your personal life from your business. So don't put everything together. Don't put everything together. Separate them. Once you've been able to determine, okay, this is the amount I'm paying myself based on research from what your caliber of person is earning as salary, or based on what you are offering the highest person in your company. Once you have been able to determine the amount that should be coming to you as a business owner, let a percentage of that amount of money you should start investing them in your retirement. Don't leave your retirement to chances. Don't leave your retirement to chances. And don't always focus on because the interest is not much. No, because now you can say, okay, I will keep investing 500,000 naira in my business. How do you account for it at some point in time? At the end of the day, you will lump everything together and you will not be able to pinpoint this is the exact amount of money that I was able to set aside for this purpose. That's one. Another thing I also want to talk about is that get necessary insurance. Get necessary insurance. Where it is possible, get health insurance. Where it is possible, get life insurance. Don't leave your life to chances. Because, for example, somebody as a business owner, there is tendency that you don't have all the benefits that other business owners and other people enjoy. So an employee might enjoy pension benefits, they might enjoy health insurance as part of their package. That is not part of your package. So you end up spending money on health issues. So you spend money on this illness today, you spend money on that illness tomorrow. But if you have an health insurance package, you are able to insure your life so that if anything happens, either a huge medical bill that is going into millions of naira, your health insurance is able to take care of it. Aside that, also is life insurance. So life insurance is ensuring that your life is being taken care of in case any major thing happens to you and you're not able to go ahead with life, right? So life insurance help you to do that. Because there are also some life insurance that actually take care of the beneficiaries. We have seen people, parents that are very rich, while they were alive, but because they didn't actually put proper plan in place for their children, and death happened when they didn't actually plan for it. Then their children now become somebody living on expectation from families. And when family alone has not even been able to take care of their own kids, how will they then remember your own children? So put plans together in a place that your beneficiaries, right? The people, your legacy keep living on, even either you are alive or you are not, either that takes you away. Then lastly, I'm also going to emphasize the fact that budgeting, just like Area said, budgeting is really, really important. don't just use fire brigade approach to life. It is very wrong way of approaching your financial plan. Don't use fire brigade approach. Ensure that at the beginning of the year you're able to set for yourself, this is the target I'm setting for myself in my business. This is the level at which I want to go in terms of revenue. These are places in which I can actually cut down costs, right? So that you are not just taking life as it comes. You are strategic about your plan. Something is driving you. You have a goal that is driving you. You know that you are not just doing life as it comes. Then lastly, I'm going to say that I'm going to also emphasize on the fact that business don't run business alone. Things are changing. Gone are the days. Gone are the days that you will say, okay, if I should put in more effort by doing things myself, I'll be able to achieve X, Y, Z. We are now in a generation whereby partnership can actually give you a lot. You know, partner with other business owners. Put yourself out there, right? Look for other means. Expand your income orientation. Don't just say, okay, so let's say, for example, you are into business and that business actually cater for, let's say, ad expert or something. You actually have people to run ads, right? That's what your business is about. How about writing books on ads? How about coaching? How about consulting? Expand so that if one arm of your business is hit for one reason or the other, either for global issues or microeconomic indicators, it's an arm of your business. Other hand will keep functioning so that you don't have any issue to actually be kicked out of business. So expand your income orientation, expand your income. That's what I would say. Thank you.
Thank you so much. Thank you so much, Temilola. So we've learned a lot, and we know that we need to separate our personal finance from our business finance, do risk management, strategic investment, and take budgeting and setting financial goals very seriously. Thank you so much. Thank you so much for making our time to be here. If you are wondering, maybe you've been part of this session and you're wondering, okay, do you have something next? What do I do next? Since I have this basic finance knowledge, where do I go to learn more? Well, Jobberman offers a financial literacy course. The link will be placed in the chat by one of our representatives. So you can just click on that link, register, and it will be very impactful for you. Uh, thank you guys so much. We have come to the end of this webinar. You guys have been amazing. We have learned loads, and I guess we'll see you at the next one. Thank you so much for being available. Bye, everyone. Thank you for making our time to be here. Make sure you register for the course and take it, and start living your best financial life. Thank you, guys.
Yeah, thanks, Ola. Good to have you, Temilola. Bye, everyone.
Thank you. Thank you, Bola. Thank you, Harry. Enjoy the rest of the day.
All
All
right.
right.